Welcome once again to Your Retirement with Insurance 365. We do this on the third Saturday of each month here on News Talk WJG at about 7:30 in the morning. As you look at your radio on your left, there's Angela Credible. Hi, hello, Angela.
Good morning, Jeffrey.
See, I'm so excited about that. I can't even get her name out of my mouth. And Jay Kenobi is over there on the right. Jay, how are you?
Wonderful. How are you, Jeffrey?
Find these folks. I am great. Find these folks online at insuranceagency365.com. They're at 711 South 13th Street. Their name is all over the building. You can't miss it here. And today we are going to learn about whole life insurance and cash value and how that all works, Jay. And I think I remember coming out of college, I bought a whole life insurance policy.
It came with your degree.
I wish. But, you know, I paid into this and I paid into this and I paid into this. And I know who my agent is because it was my uncle. But I paid into this and paid into this. And I think ultimately I did something with this. But maybe that's something that folks should maybe take advantage of. And we're going to talk about a scenario that these two are working on here in the second part of the show. But let's start there. Whole life, cash value. Some people maybe think that they get the death benefit and then the family gets the cash value. And I just don't think that's how that works. Right, Jay?
Well, it's a unique product, and it has its place. There's no doubt about it. It has been there for a lot of families in wonderful ways, Jeffrey, upon death. There's no doubt. Any form of life insurance is a good form.
Yeah.
But what Angela and I are running across a lot of, and I have run across this for 30 years, people that once you reach about 60, Jeffrey, do you usually lose the children in your house?
As a matter of fact, just a couple of weeks ago I did.
Okay. So the kids are generally gone. Angela, do you carry a lot of debt?
Usually not.
Usually not. So the purpose, let's just use the word purpose because that's important. The purpose of your product, the purpose of that money, that promise, the commitment on you to pay monthly is kind of dwindled down or to nothing or been greatly impacted by your kids being out on their own, having their own lives.
Hopefully successful.
Yeah, and you're turning that chapter. You're going into the chapter of retirement. So you've paid off your mortgage. You've been aggressive on paying off the vehicles. You've maximized your 401ks, your IRAs. You've built a nice savings, 3 to 6 months savings for emergencies.
Mm-hmm.
So what is the purpose, Jeffrey, of the life insurance? You just honestly have to ask yourself, am I just in a groove? I'm meeting with a lady today that she called me and said, I see I have a monthly draft from an insurance company. This is about 2 months ago.
Oh, boy.
We finally got to the bottom of it. She had finally checked her checking account and saw that she had a monthly draft for the last 37 years.
There's a double-edged sword to these automatic deducts, by the way.
Yeah, you can automatic deduct MPPD and Norfolk City Water or whatever.
Yeah.
But at some point, we just get so accustomed, Jeffrey, that we just, okay, it's going to be an EFT or a pre-authorized check, whatever you want to call it, and it's usually a whole life plan. And then they come to Angela and I and they say, do I need this anymore? And you have to really ask yourself, there's nothing ever wrong with a whole life. I mean, it served its purpose.
Yeah.
But at some point, is there a better venue? Is there a better leverage point for you? And so whole lives can bring about great opportunities for your next chapter. That's what people miss. They think because they're in a whole life and they're 62, they're just going to stay in a whole life till they're 82, 92. When actually it's a wonderful opportunity of past money, past commitments, past monthly premiums to now turn the chapter and say, what is my objective? Do I have a different objective than just life insurance?
Mm-hmm. So really what you look at is the insurance policies that I had and that I bought years ago. What it's protecting is basically no longer there. So, and I think we just described that situation that most people might find themselves in.
Yeah, I mean, look at the three of us in this room. I mean,
Yeah.
Angela, if something happened to her today, you're in your 30s, 3 children
Yes.
and a husband, and there's needs for life insurance, drastic needs. If something happened to Angela today, her husband and family would be greatly financially impacted.
Yeah.
You take a look at me, I'm 50. My kids are 22, 28, don't really need me anymore. Wife kind of needs me. Kind of.
Depends on
but
the
I-
day.
but I'm 50, so it's changed. You're in your
I just turned 60.
You just turned 60,
Yeah.
so you're further along in that next chapter than I am, right?
Oh, yeah.
You're one chapter ahead of me, basically.
I'm smelling it.
You're I'm dreaming it, you're smelling it.
I'm smelling it,
Angela,
man.
it's not even a thought for her.
I can see the finish line. It's coming, baby.
so you always just have to ask yourself, and I know this. People bring it in and they don't aggressively hand it to Angela and I. There's a worry they did something wrong. There's a I don't want to admit the last 30 to 40 years, right, Angela, that I may have done something wrong. So how do we handle that?
Right. Well, it's best that you come in and talk about the situation rather than let it keep going. There's ways you can use that money that you have sitting there.
And we're not going to say you did anything wrong.
Well,
Again,
you
you're
really
just
didn't.
you're just leveraging. Maybe there's an opportunity out there ahead
Yeah.
that we can move this to, because cash value in a whole life, cash value in a universal life, cash value in a variable life, they're great. Cash value in an annuity. They're sometimes purchased at your earlier years for a need, and you just get habitual. And that cash value can be a great opportunity. And you don't. What's the downside of the cash value, Angela, in most life policies?
The downside would be if you pass away, it's gone. Your family doesn't get the death benefit plus the cash value. It's just the death benefit.
Right. But one of the reasons why, and I remember why I bought my whole life insurance policy years and years ago, the cash value aspect of it. I mean, that's what appealed to me about it, because at that point in my life, I wasn't married, wasn't even thinking about getting married yet, but I guess I wanted enough money left behind that, you know, if anything did happen to me, mom and dad could bury me or whoever, and that would be taken care of. But that's what really appealed to me, was building some cash value that maybe I could grab later and do something else with. The problem is most of us forget to do that.
We forget there's two sides to that. Like Angela said, when they deliver the death benefit for $100,000, but you forget you left behind $35,000 of cash.
Ooh, yeah.
So what were they really on the line for?
Yeah. Yeah, that's how it works. So maybe just take a look at that. And if you're in these phases of life, if you're in the J phase, we'll call it, around 50, and really that's what this whole show is about, your retirement with Insurance 365. We start talking about those last 5 to 10 years before retirement to start getting things in line and to look back at where you were, where you are now. Your life is different. Look at the policies that you have, the policies that served you well maybe years ago, maybe aren't so much anymore, and now it's time to maybe do something about that. So that's really the subject of what we're talking about today here. These two fine folks meet with people every day. As a matter of fact, they're going to be meeting with somebody shortly after the show today. But they are meeting with a special couple right now that they're working with. And I think they're going to typify what we're talking about here.
Yep, we're going to show a live example.
All right, so stick around with us. We're coming back with more of Your Retirement with Insurance 365. We do this every third Saturday of the month at around 7:30 here on News Talk WJAG. Find these folks online at insuranceagency365.com. They're also located at 711 South 13th here in Norfolk. So hang on. We are coming back with the second half of Your Retirement with Insurance 365 next on News Talk WJAG. And welcome back to Your Retirement with Insurance 365 here on News Talk WJAG. Angela Cradaville is with us here. She usually is. And over on the right, Jay Kenobi. And today we're talking about whole life insurance policies with cash value. Are they serving you now the way you had intended earlier in life? And the answer is, depending on where you're at in life, Jay, we talked about maybe that 50 and up, 60 and up, the Jeffrey category there, that if I still have a whole life insurance hanging out there And there's probably a pretty nice cash value on this thing. If I've had this for maybe 30 years or so, there's probably a pretty nice cash value sitting there.
Yep, absolutely. So
check your bank draft first to see if you're getting that automatic deduct and you're wondering, where's that money going? And you've had that automatic deduct. But now here you are. Let's say you're in the Jay or Jeffrey phase and you're sitting on a whole life insurance policy. What can I do with that cash value? If I've protected and the things that I bought it to protect years ago are no longer there, Jay, you're telling me maybe it's time to do something with that cash value.
Well, Jeffrey, a lot of times the fear of people is running out of money and getting sick. I mean, that is the two most common answers Angela and I get when we say, what do you fear the next 20 to 30 years of your life? And there's two things, running out of money and becoming ill. And when you talk about becoming ill, you inevitably go down the subject of long-term care insurance, meaning assisted living, adult daycare, Alzheimer's units, nursing home care, and most importantly, home health care. Most people realize that is a risk for them. But then you come back to how would you like to pay for that? And then there's silence in the room and they choke on their water and say, Jay, I don't really want to talk about that. I mean, that's not a fun subject.
No.
Who's going to pay for you if your care, your mobility, your cognitive thinking changes?
But nobody wants to push that off on their kids, though. So that's why we're having this conversation.
Their daughter will always say they're going to take care of them. I love it. It's a wonderful answer. Mm-hmm. But in reality, it's a tough answer.
When you start getting the phone calls in the middle of the night.
Daughters are wonderful.
You think twice about that.
Yeah. So you ask them, okay, are you in the next chapter? Is life insurance less important and long-term care more important? And is that answer typically that answer, Angela?
Yes. Long-term care is going to be your fear now, not actually thinking of your death. It's who's going to care for me, who's going to pay for it.
Yeah.
I actually just had a phone call the other day of a daughter in panic, and she's like, Medicare, won't they pay for somebody coming into the home to help mom? I said, no, that's not Medicare. She's like, well, then who's going to pay for it? I said, you have to have a nursing home, assisted living. You have to have a long-term care, short-term care policy. And she was just in panic.
And they had none.
They had none. She said, guess I'll be doing it.
Ouch.
Yeah. And prepare for your life to take a turn.
Yeah.
So an example of one, we'll go through two examples. One lady I was working with, she had a whole life she had a cash value, Jeffrey, of $25,000. She had the policy for about 20 to 25 years. So she had $25,000 in cash value in a whole life, and her death benefit was around $125,000. Okay. But I said, do you need the life insurance? And she said, well, my husband and I, just typical people. No, I really don't have a big need for life insurance. Sure, it would be nice. My kids are successful, and my husband and I have paid off our mortgage, paid off our vehicles, and we're actually in retirement. And we were semi-retired is what it was. And do you have a better solution, Jay? And the example I showed her and worked with her on is to take that $25,000 of cash value, move it into a new product and get a new leverage. Get a different leverage. So take the $25,000, move it into a new product, and the leverage becomes taking that money and getting a long-term care and life insurance combo product.
Okay.
So what that does is it goes from strictly a life insurance situation, a life insurance need, Jeffrey, to a situation that gives you two benefits. You either are going to use long-term care or you're going to have your life insurance. Now you're using a product opportunity to cover two of your risks instead of one.
Gotcha. Are there tax implications to moving that money?
No. Nope. You could do insurance lingo, but 1035 exchange, that type of thing. You move it over. And in this lady's case, she could take that $25,000. She would lose a little bit of life insurance. She'd lose about $20,000. She'd go down to about $100,000.
Of which she doesn't need as much.
Yeah,
anymore.
exactly.
Anyway.
Yeah. Kids are gone. House is paid.
Mm-hmm.
So she still ends up with $100,000 of life insurance. and she has $206,000 of long-term care.
Bingo.
Bingo. And her premium annually is around $2,000. So now she was paying $800 on her whole life anyway. She pays another $1,200 a year, and she's gaining way out there over $200,000 in long-term care, which her husband said, that makes me feel better. He kind of joked. He goes, I'm not the best caregiver.
Most women wouldn't want their husbands taking care of them in that situation. I
No,
don't think.
no. There's probably two guys in the room would admit to that.
Yeah.
And so, she's gaining a lot more long-term care, still ending up with some life insurance. Where on the other side, what she currently has is just a life exposure and a life benefit. She can come over here and gain a life and long-term care benefit. Mm-hmm. I mean, how simple is that?
That's absolutely brilliant, is what it is, because what she had that for before, she doesn't need it for anymore, and then to take that and use that, and all of a sudden know that you're going to be taken care of. And as far as that premium goes, that's pretty around $2,000, $2,100. That's pretty typical yearly payment for long-term care insurance.
Exactly.
You're around that $1,700 to $2,000 area there anyway.
Now, Angela has a case that I think is even better and easier.
All right.
We had a male, he had $64,000 worth of cash value built up. He could roll that into the product that Jay was talking about and still obtain an $82,000 death benefit, and then also have a $164,000 long-term care benefit.
That's huge.
Wow. So you take,
And make no more payments.
There's the big point.
Ding, 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 ding.
Sports Center highlight right there.
Wow. So then he's just set there, and that's something that he probably will need eventually. Like you said earlier, there is going to be some kind of a benefit paid there.
Yeah, because it's guaranteed. You're either going to get sick or die, Jeffrey. One of two is going to happen. Both can happen.
Yeah, either you're going to get it or somebody else is going to get it.
And so he just took a life policy that he had, and he lost about $20,000 of the life insurance, so he ended up with 82. Mm-hmm. But he gained $160,000 of expenses that can be passed on to that insurance company instead of you paying the $162. And keep in mind, you have a 71% chance of having a long-term care claim nationally. So you have a 71% chance of a claim, so you need some kind of long-term care plan. If I said 71% chance of a homeowner's claim, everyone would be pretty that'd be homeowners is like less than 3%, but everybody carries homeowners.
Yeah. Yeah, we do.
And so you have to stop sometimes and be more analytical, be more skeptical. It helps you with managing your money, and think to yourself, if I have a 71% chance of a claim of either being assisted living, nursing home, home health care, adult daycare, respite care, adult daycare, why wouldn't I have a plan in place to give some money to pay from not my estate, not my 401k, not my savings, move it on to an insurance company? So in Angela's case, that guy that's a slam dunk, because the whole life he was just paying on and really didn't have when we first met with him, he goes, I don't really know why I have this anymore. He goes, I've just always had it. And
you imagine the people that are running to their file cabinets right now, digging out all their old whole life insurance policies that are sitting there with these cash values?
I hope so. Call 371-3136 and get an appointment.
And they'll walk you right through it.
I mean, it's just helping people. It's just it's really just helping people, Jeffrey, understand what the industry offers you. That's really all we're doing.
Right.
It's not
And you're not there to embarrass people, and people shouldn't be embarrassed about asking these questions. You should be embarrassed about not answering these questions or asking these questions.
Yeah.
To be sitting there at the end of life and a cash value that goes unclaimed when you could take it and really put it to work for something that you now really need. So, depending on where you are, if you're in that Jay area or that Jeffrey area, 50 or 60 years old, now's the time to really pull all of that stuff out and really take a good skeptical look at that. And I like that term, be skeptical, ask a lot of questions. And nobody, it's not your livelihood. These two live and breathe it. And that's what they're there for, to help you through these times. Got a little time left over here, Angela, but you and I, before we came into the second break here, we were talking about open season coming up real soon here. By the time we get back together here in October, we're going to be right on top of open season for Medicare.
Her hair will be gray.
Yeah, annual election period for Medicare, drug cards, and Medicare Advantage are coming up. October 15th is the start, and it goes to December 7th. So just make sure to always see your options, even though
Right.
your drug plans haven't, or your drug lists haven't changed. The plans do. So it's always smart to take a look at that
Every year.
every year.
Take a look at that. And we can get into that more here in the ensuing months, and I'm sure we will. Angela herself is still boning up on a lot of the new things and a lot of the new products available as well.
Yeah, the companies don't release that information a lot of times until October. So there's nothing to be done right now, obviously. But October 15th is the go date.
What would you suggest, though? There's not much to be done, for you other
No.
than the research. But is there
Correct.
anything that the folks should be getting ready for
Just
before then?
make sure to have your drug list ready if you want to get it checked out. Yeah.
They can help you out. That's what it's all about. And that's really why we're here every month on the third Saturday of the month. It's your retirement with Insurance 365. So whole life cash value. Do you have a whole life insurance policy sitting around in your filing cabinet? You better pull that baby out and give these folks a phone call. What's the number again, Jay?
371-3136.
Find them online. Research these folks. They're good people. InsuranceAgency365.com, and they're located at 711 South 13th Street in Norfolk. And that is your retirement with Insurance 365 for the month of September. We'll see you again. Guys, thanks for stopping by.
Thank you.